What up, everybody? Who's got a? Looks like Mariano's got a new haircut, new hairdo.
Yeah, what a rock star! What's your shirt say?
Says I got it at Miami. I think it was.
Bitcoin and beyond. It's like
Nice,
it's like beyond
from Genesis. No, from Gemini. Sorry,
from Gemini. Nice. VJ, where are you? Are you in New York?
Yes, I am in New York.
damn, BJ, you play the piano? Nice. Yeah, something.
DJ actually does play. You do play, dude. Right?
Yeah.
I thought you did.
No. I play the flute.
That's right. He's a flute player.
Yeah.
That makes sense. That clears up any of the ambiguity. You know?
Can you like enchant snakes? With like.
Can you what? Sorry.
Can you like make snakes dance with the flute?
Hypnotize.
Oh, that's right. Well, I mean, that is kind of an Indian talent, right?
Yeah.
What's with this thing? What did I hear? And maybe this was like fake news or something, but didn't I hear that like India voted to like rename their country? Like
No, India didn't vote to rename their country. The G20 meeting is happening in New Delhi, and in the invite they referred to the original name of India as Bharat. So people are, kind of confused or excited, and they want to have something to discuss about, and people don't like being called as Bharat. So that's what is happening.
They don't like being called as Bharat. So the G20 is effectively deciding this on behalf of India?
No, it is just India sent an invitation, and it said it was Bharat instead of India.
Oh. And he's like, where is that? We can't find it on the map.
Interesting.
Yeah. That's all we need is more worldwide confusion, right?
Yeah.
Let's just rename the population of 1.3 billion people or whatever it is. Yeah. Is it 1.3? Well, what up, guys? Hello. We got episode 10. We made it to double digits. Come on, celebrate.
Keep going.
Let's do this. Yeah.
Grind.
Yeah.
One at a time.
One at a time, exactly. That's what's up.
And to commemorate that, to 3 digits.
To commemorate, Mariano got a new hairdo. So he's like looking very 80s to, I'm liking that, dude. Yeah. Hey, just get a fan. Can you get a fan and like blow it in your face? You can just like do that.
Slow-mo. We need a
We'll do that for the next one.
I love it. Well, there's actually Argentine news, right? Mariano? There's some Argentine news
on every single podcast. Something happening in Argentina that we're talking about.
I feel like it. I think there's you guys got a lot of stuff going on. You guys are newsmakers, man.
Yes. So to give everyone some context, tremendous times happening in Argentina right now. There's one presidential candidate, which is the likely to win, who is a libertarian. Doesn't mean he's extreme right-wing or extreme left-wing. He's just a libertarian. He believes in personal freedoms. And he's famous for saying that he wants to destroy the central bank of Argentina. He says that he physically wants to destroy it. So we no longer print money. And of course, that got the attention of a lot of people. And one of the people that caught its attention is the United States reporter Carl Tucker, who had famously interviewed many politicians. He interviewed Trump. He is now very big on X. And he actually flew to Buenos Aires. And yesterday he interviewed the presidential candidate. So super excited over what's going to happen, over what the interview is going to be like. And I have no doubt that this will increase the popularity of this candidate throughout the world.
That's Tucker Carlson, but we won't hold that against you. As
Yeah.
What did I say?
Carl Tucker? Nice.
Carl Tucker. we can send Tucker a DM, let him know that. But I think that's pretty rad, actually, Mariano, that he's interviewed. I'm looking forward to this, quite frankly, because I haven't listened. Now, I think I asked you before, but does he speak English? Does the
I'm
president?
not sure he speaks English. Like, I mean, in Argentina, I think something like 10% of the people actually speak some English. So
Okay.
it's statistically unlikely, right? But
Okay.
I will see. I'm very, very excited from it. I definitely think it's newsworthy, and how crazy it is, right? That I think, like in life, like what swings one way goes like the other way, right? And Argentina has been like an extremely left-wing populist country for many, many, many years, right? In fact, like we had dictatorships set into place so we don't like become communisms, right? Become communists, right? And how insane it is that after so many years, in the most unlikely place that something like this could happen, is happening, right? So I think it's a swing. It swings one way, and then for some reason it swings the other way.
You're right. I think that a lot of the world is upside down right now. Right? What's normally, like you would see the United States as being a bastion of freedom, right? But we are taking on a lot of the opposite of those ideals currently, and just relating it to crypto, that's a perfect example. I mean, you're looking at countries like Argentina and El Salvador. There are others that are kind of essentially really open to the prospect of inviting in the technology that is crypto and blockchain. And then you have the United States, who has effectively said, we're just going to sit on the sidelines and let everybody else get ahead of us for the at the minimum. At the maximum, they're actually trying to block it. So it's I love to see Argentina actually doing something about it, or at least a candidate doing something about it, or saying he's going to do something about it, as far as opening up and deregulating. But again, the interview should be very enlightening and interesting. I'm going to be waiting with bated breath personally. What about you guys?
Yeah. What a weird change on the interviews that he's making. Like last interview, he was interviewing someone that said that he had sex with Barack Obama or something like that. And now, like a libertarian in a third world country.
He's covering the gamut, isn't he? I think it's who knows who's going to be next, Kim Jong-un or
might be us,
trying
right?
to find his new branding angle. He's just
well, I think he's going after Putin too. I think he's trying to get Putin.
He definitely wants to.
Yeah. That would be interesting. Yeah, that would be interesting.
For me, the interesting angle is around how we are able to get news through alternate ways, right? Like, no, this is not a mainstream media channel. If you look at Tucker Carlson's first interview, it was watched by 120 million people on he did a Twitter Spaces, compared to a cable TV network like Jimmy Kimmel. Jimmy Kimmel has 1.7 million people who is watching it, right? So on one hand, you have Tucker Carlson at 120 million views. On the other hand, you have Jimmy Kimmel, very successful TV show, but has got 1.7 million viewership. So it just goes to show how these other alternative media, whoever can tap into that, all the social media channels, people who can really master that, can have a bigger impact than through traditional media like TV or radio or other means.
Well, not that we were talking about this, but VJ, you kind of brought it up, the trend. And I don't think anybody's got two eyeballs and two ears can really ignore the fact that MSM, like mass media, traditional media, is dying a very slow death. And I think that death is speeding up. And it's being replaced by, I look at my own, how I consume content, right? I invest very little time now watching TV. I'm listening to podcasts, I'm watching YouTube. These are the platforms that I choose to be on, X, Twitter, things like that, right? That's now where I consume my media. And I know I'm not the only one. And I know that I actually think that this next presidential election next year is going to be won or lost by how well that presidential candidate actually leverages not necessarily social media. I don't want to say social media, but like look at long form content on podcasts like we're having right now, right? We can actually engage in a discussion. We can have discourse. We can go deeper on a topic, right? You see any sort of politician or any person who's running for public office, and they're on Fox and they're on CNN and they're on MSNBC, and they have these 60-second sound bites 30-second sound bites, and they say the same shit over and over and over again, right? It's the same canned responses. It's the same, throwing the other mud on the other competitor, but you never know what they're actually about. You never know what they mean on a various different subject or an issue. But a long form podcast enables you to do that an hour, 2 hours, 3 hours in some cases, where you can actually get to the meat and potatoes of, all right, okay, instead of you just slinging mud on your competitor and who your opponent and who you're running against, you can actually build out a vision for what you would do in this circumstance or on this issue. And you don't just get 30 seconds to talk about it. You get 10 minutes, you get 20 minutes to talk about it. So I think that I think that the next presidential election is going to be won or lost based on how well that candidate can connect through a network of podcasters, and really get their vision out there so that we can see as a citizenry. We can make our own informed decision, not what CNN tells us, not what Fox News tells us. So I think it's amazing, personally.
Yeah, and these podcasts end up being like pay-per-view events. So it's like, exciting, and then it just sort of builds on itself, the virality. Like, think about how many people see it after it's posted versus on TV. It's sort of just gone afterwards, unless someone's recording it.
Precisely. I mean, like the whole thing that Trump did on the what was it, the Republican debate, that was a total troll move. That was a total alpha move where he posts his interview 5 minutes before it's scheduled to go on, to the point where the actual moderators, I believe, they were asking a lot of softball questions that first hour until they knew the interview was over, when they were going to have more people viewing it. But even then, I mean, the viewership of that particular interview was enormous. Now, I think some people were saying, oh, it's like 180 million views. I don't believe it was 180 million views. I think it was like 180 million impressions. But still, like if you look at like 10% of that, you're talking like 18 million views, and that's about what you can kind of ascertain from that based on the number of impressions to the number of true views. It's generally like around 10% of that. So if you got 18 million views on an interview like that, that's still, I believe, I want to say, actually trumped, no pun intended, the viewership and the ratings of the debate itself.
Yes,
So,
agreed.
Yeah.
For whoever whoever is mastering all these other alternative ways of being able to reach people. Trump has done a great job. Vivek Ramaswamy, the other Indian candidate, he's doing an excellent job of being able to show up on different podcasts. He was on All In podcast, and he shows up on so many different podcasts and be able to engage people. None of the other candidates are doing it to this extent that that Vivek is doing, right? If you look at Joe Biden or Kamala Harris, right? They are still in the old school way of being able to reach supporters and viewers, and being able to have a different channel of being able to reach the target audience. That will be powerful. And I agree with you, Dominic. This is probably going to be the last election where mainstream media is going to have as much of an impact. And we are entering a new way. Things like what we are doing in terms of being able to put content out there, it's going to become more and more valuable in the future.
I agree, BJ. Absolutely agree. All right, let's move on, because there's been a lot of great news inside the crypto space this week, and none other than the fact that the Financial Accounting Standards Board, I believe, the FASB, they voted in favor of fair value accounting for Bitcoin. The rules are set to go into effect as soon as 2025, so it's going to be about a year before, a year and a half. But companies will be able to apply them earlier than that. So effectively, Bloomberg's reporting that the FASB is set to introduce new fair value accounting rules for Bitcoin and other cryptos. These new rules aim to provide a more accurate reflection of the market value of digital assets and bring greater transparency to the financial reporting of companies that hold cryptocurrencies. The rules expect to be published by the end of the year, are set to go into effect as soon as 2025, but companies will be able to apply them earlier than that. So let's unpack this. VJ, I know you have some comments on this. I'll kick it over to you. What do you think?
Thanks, Dominic. So to be able to understand it, let's look at the background. Currently, what happens is that there is no specific accounting or disclosure rules for crypto assets, right? So companies like Tesla and Square and all the other companies who are holding these crypto assets, because there is no accounting rule, they are classified as intangible assets, right? It's to be specific, it's classified as indefinite lived intangible assets. So that is the same category as brand value and other intangible assets that a company would have, like copyrights and patents and intellectual properties. So this makes it very difficult for companies to show the value of the crypto assets that they are holding in their balance sheet. And this becomes an issue if the value of the asset goes up, great, but what happens for how these intangible assets are accounted is if the value drops, then the accounting for it should be able to denote it on the balance sheet that the value dropped, and you cannot, kind of increase it when the value increases. So that becomes a big hurdle for how these assets are held in companies. The FASB new ruling is a big boon for all these companies that currently hold crypto assets. But more importantly, it's going to pave the way for a lot of other companies to be able to hold crypto on their balance sheet. When we originally started the CAT software, Crypto Asset Accounting and Tax, one of our fundamental beliefs is that crypto is going to be held by a lot of these companies, not as a way of investing or speculation, right? Not from a financial gain perspective, but from a perspective of being able to operate their business day to day. If they want to be able to run some software, decentralized apps, if they are storing files on the cloud, all of it is going to require these digital tokens, and these tokens needs to be accounted for accurately in the balance sheet. So it's a huge boon for existing companies, and it's going to be super helpful for any other companies in the future that are going to be holding these crypto assets on their balance sheet.
Yeah, that's a huge deal. What do you guys think, Michael, Mariano?
So, I mean, I think this is great, and in a way could encourage more companies to have crypto assets on their balance sheets without all the hurdles that they were previously attached to it. So I think this is positive. It's bullish on that side.
Yeah, sort of the march of crypto. These things are bound to happen as we move into the future. So excited to see it.
Yeah, I think it really, honestly, it's something that it's something that I didn't even know was necessary in order. In other words, I didn't think it was a stumbling block. The stumbling block that it is, or that it has been, for the exodus for companies to actually migrate onto part of their balance sheet on a Bitcoin or on a crypto. I think I misinterpreted the importance of this, and then once the announcement came out, I went into it and looked into it a little bit more further. And so I really think that a lot of these companies that have treasuries that want to actually allocate a portion of those treasuries to Bitcoin, this was something stopping them. This was a hindrance. And so now that this hindrance is removed, I think this is accepted. This is a huge deal, as is, Bitcoin ETF, which we can cover later perhaps. But the combination of this event and a ruling on an ETF, I think, is essentially creating the 8-lane on-ramps for all of these trillions of dollars of capital to come into the space. So, one box checked. Let's look for the next one to get checked. But position yourself accordingly for the I don't want to say the inevitability of it, but for the likelihood of it, or for the high probability of it. So another topic, which has to do with Bitcoin miners, actually. And there's been some news of the Texas grid having some issues, right? Texas grid has had some issues over the last couple of years with like extreme heat, extreme cold in their state. Now, what a lot of people don't understand is that there's essentially two separate grids in the United States. There's an eastern grid. I think it's divided along the Mississippi, I want to say, and a western grid. But Texas is essentially all of its own, right? They have their own grid. They're not connected to the eastern grid. They're not connected to the western grid. So they have their own grid. They manage that. So I just want to provide a little bit of framework there because there's a lot of Bitcoin mining going on in Texas. Riot Platforms is one of them. And they say that the Texas energy strategy reduced production costs by $31 million. So Texas had extreme heat, as many people know, this summer, as the larger context of the country had a big heat wave throughout the summer. But as they baked in the sun, Riot Platforms received two types of monetary credit for being attentive to the grid's power needs. So they're serving the grid in a very positive capacity here. So Bitcoin miner Riot Platforms mined fewer Bitcoin in August and in July, but they received over $31 million in power credits. So that's equivalent of around 1,136 Bitcoin. They pointed out. Not a small amount of credit. Riot received an estimated $24.2 million in power curtailment credits under its contract with the Texas grid operator, and the name of the grid is ERCOT, or Electric Reliability Council of Texas, and almost $7.5 million from ERCOT's demand response program. So those monthly credits are greater than the credits the company received for all of 2022. So guys, this is a big deal. It appears. Who would like to take it first?
Couple of things to clarify on that, right? One is what Riot got was an energy credit, means that they're going to offset it against their future energy usage. People have been talking about how it's bad, like these Bitcoin miners are using up all the energy available in Texas. However, the way that I see it is Bitcoin mining is almost like shock absorbers of energy usage. So similar to how if you have shock absorbers in a car, it makes your ride smoother. When you have a dip, right, the shock absorber expands. And as you go through the dip, onto the other side, it contracts again. So the people who are in the vehicle will have a smoother ride. So similarly, people in Texas had a smoother ride because of these Bitcoin miners. When the energy capacity exceeds the grid capacity, then these utility companies can reach out to the miners and then tell them, hey, we'll pay you more. They actually pay them more than what they would have gotten by mining Bitcoin. So they can quickly say, hey, we'll pay you like 1 cent more than what you would get by mining the Bitcoin. And that provides almost like a shock absorber capability. And that is easy to do because it's very digitally measurable for mining Bitcoin. It's going to be much harder to do if you have a manufacturing plant, right? Imagine going to a manufacturing plant and saying, hey, like now shut down your plant, we'll pay you more. It's going to be so hard for them to even account for what are all their opportunity costs, how do they pay for all the people who are there, etc. Whereas in Bitcoin mining, it's very easy. They can automate it and have it as a shock absorber for the energy system capability for the entire electricity grid for the nation. So I think this is super beneficial for the electricity grid as a whole.
It's almost like the miners in Texas are kind of saving the ass of the Texas grid, if I could say. Because I mean, the way you describe that, BJ, is awesome as far as like a shock absorber. So it's limiting the amount of variance that they're having to experience with outages and things like that, right? So I think that's a thank you for kind of sharing or kind of painting the picture around that. But Mariana, I think you were going to say something. Go for it, my friend.
No, I was just checking, and I was looking into how much the price of mining Bitcoin has reduced compared to the actual price of Bitcoin. And these companies, they have become like very, very good at doing so. So for example, the best company that is doing this as of June 30 is Riot Platforms, right? The cost for them to mine one Bitcoin is $9,438. while the price of Bitcoin is 26,000, right? So it's insane. And I was looking how competitive they had become, and how big of a margin they actually leveraged into these past few months.
Well, I find that interesting that if they're that profitable now, imagine the profitability when Bitcoin's trading at $40,000, $50,000, $70,000, right? So here we are in the climate that we are in right now. Now, obviously, the hash rate and all that stuff increases as well, and so it's going to cost more.
And the halving,
and having, of course, indeed, Mariano, great point. And also, but that if your margins are that good now, then imagine the margins later on when you have maybe less competition, or you've got effectively more of a hash rate, because it's going to make it cost prohibitive for other miners that don't have that kind of margin to operate. So they're effectively going to have to shut down, or maybe just shut down periodically, in which case there is a huge advantage for miners like Riot with large margins like that. So very interesting. Any other comments, guys, on this?
Yeah, I would take the cost of mining Bitcoin with a grain of salt, because I don't think it takes into consideration the amortization of all the investments that are being made. So we just need to take the $9,000. Don't take the $9,000 number seriously. You can consider it as the cost, maybe all their incremental cost for being able to do that, and doesn't take into consideration all the hardware costs that they had invested in before.
Well, so you're not saying we should just YOLO into a bunch of Bitcoin miners right now, EJ? Huh? No, or get. Oh, I got it. I like it when these people come to me that have been in Bitcoin for like 3 months, or not even that, or a month, and they come to me, hey, if you give me 1 Bitcoin, I'll give you 0.1 Bitcoin a day for da 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 da. It's like, okay, that is not absolute Ponzi. Speaking of, I think there was a Turkish guy that just got sentenced to like 1,100 years.
I was going to send you guys that.
For some scam.
11,000 years for essentially a $2 billion scam that he did with a crypto exchange called Tokenomics or something like that. So, like, I feel I might get the impression that we are now seeing more and more people being held accountable for crypto scams and for rug pulls and all those things. I remember that in 2017, like, nothing happened in a way. I think now either the authorities had gotten better at it, or people are just more serious, or the scams are just too big to ignore. But that it might be an impression by myself. I don't have any statistics, but it looks like people are being more and more held accountable.
Well, holy moly, that's, the $2 billion is what it said that this guy ran off with. And I don't know if this was an actual Bitcoin scam. It looks like it was an exchange, right? But still, never the case. The Bitcoin ones I was referring to is you get a lot of these Ponzi's that crept up to, like, these Bitcoin mining Ponzi's were like, oh, here, give us a Bitcoin and we'll give you a guaranteed rate of return of 1% a day because we're mining Bitcoin with it, right?
Or all the bots,
a complete and utter scam. So if you ever get, approached by someone who's your long lost college roommate you haven't talked to in 10 years, and they're trying to approach you on something that they know nothing about, just avoid it. so I'll save you the time, the money, and the distress from that. But yeah, this whole thing, you're right, Mariano. I think we're starting to see more people, minus SBF, actually, get thrown in the clink and the key thrown away, and SBF will that remains to be seen. But it sounded like his partner, Ryan Salami, I believe, would also just, I think he pled guilty to it. Yeah, I saw an article about that as well. Maybe one of you guys want to pull that up, but we can maybe cover that topic too. But the point is I think there's a lot of, it's good to see some of these people get caught and face some accountability, frankly. Anybody else have any comments on this in particular?
Why 11,000 years? What's the difference between 11,000, 10,000, 1,000? What message are they trying to send there? I'm wondering.
Michael, life extension, dude. AI life extension that's gonna, like, dude, we're gonna live forever, bro.
They're gonna keep him alive. They're gonna keep him alive for that long. That's the bonus that he gets.
Yeah, in case we have life extension technology where people can live forever.
11,000
who's that?
years.
Ray Kurzweil. Yeah, Ray Kurzweil talks about living long enough to live forever. What it means is that technology is advancing so quickly that that our average lifespan of a human is increasing. So maybe if he ends up living to 10,000 years, if they only have a ruling for 10,000 years, maybe he'll get out after 10,000 years and he gets to live the last 1,000 years of his life in peace. So this is just to prevent that.
Yeah,
Dude,
but wait,
BJ.
there's one that doesn't really make sense. I know that in the United States criminal court system, sometimes they sentence to 3 life sentences. How does that make any sense?
Dude,
Like, like the serial killers, like a life sentence is already a life sentence. You don't need to add another one.
Yeah, I agree with you, Mariano. I think it's a little bit redundant. And frankly, in those Turkish prisons where this guy's going, I don't know if there's enough resveratrol in the food there for him to get access to some of that life extension technology.
Yeah, maybe they're incredibly forward thinking, and if you get put in prison for that long, then you get forced to live for that long, so you can live out your sentence, and that's the torture.
That's very dystopic.
They should give him a gold coin. If he serves his sentence completely, then they should have like a golden watch or something like that.
An NFT. He gets an NFT.
Hey,
he gets an NFT. Yeah.
You get it for 40 years for working at IBM, I guess. So might as well. Sounds like about the same. Work for 40 years for IBM, spend 40 years in prison. So next topic, gentlemen, is a huge deal, in quotes. Visa reveals crypto payments bombshell that could cause Bitcoin, Ethereum, BNB, and we won't bother mentioning the rest of these, except for Solana, because Solana is the one that kind of did the deal. Some price chaos. So Bitcoin, Ethereum, and other major cryptocurrencies are trading sideways. Let's see here. Actually, the Bitcoin price has lost most of its summer gains in recent weeks. That's not what this is about. But payments, giant Visa has said it will ramp up its use of Circle's US dollar stablecoin on its network, potentially opening the door to future Bitcoin and crypto expansion. And then specifically, there was actually a deal. I want to say it was in this article. There was a deal that was done earlier this week, announced with regard to Solana and Visa. So, and it was announced by Visa themselves. So this is a very interesting development. Being able to go direct crypto to Starbucks, direct crypto to buy your car, direct crypto to buy your pair of jeans and pair of shoes. That ability to do that is something that has been kind of lacking, right? We've had the crypto.com credit cards, and the all the different credit cards from the issuers, but this goes directly into a stable coin, right? And exactly, Michael's showcasing it right there. So I think this is a kind of a watershed moment. It's a pretty big deal. Some people are questioning, well, why Solana? Some were a little bit more skeptical of Solana. Why not Ethereum or even Ethereum layer 2? But nevertheless, I think that this is a good movement. But want to hear what you guys think. Don't all go at once.
We don't think anything.
Okay.
What
Fine.
What was the topic again? No. Yeah. I forgot what I was gonna say. I had a comment, but it's gone.
So the USDC expanding to different chains and being able to settle on different chains. We are going into an era where we are almost chain agnostic, right? If you think you have an asset USDC, it should be available in pretty much all chains, right? We say, okay, USDC on Ethereum, is it USDC on Binance chain? So right now we have all this confusion. And layer 0 is one protocol that is coming up that's going to hopefully make the transactions and movement of assets from one chain to another chain easier. So I just want to have USDC, doesn't matter which chain, I want to be able to make those payments. So expanding into other chain, I feel like it's bound to happen. And there are a few other people who are working on solutions that makes the transaction seamless.
Didn't
Go for it, Michael.
Didn't Dai move over to Solana? Or they announced that they're migrating over to Solana and dumping Ethereum.
No, okay. So no, we have to be very careful about what was specifically mentioned. Yeah. So what happened was that Maker mentioned about using some other chain other than Ethereum, and they talked about having their own app chain, right? Like app chain has been a theme for the year. Injective protocol, they announced their own app chain, and it was almost up 5x. So app chains have been a theme, like even with the Bored Ape, right? They had their own app chain. So Maker wanted to fork Solana and create their own app chain to be able to run it. And on back of that, Vitalik sold his Maker position. So that is what happened. It's not like people are dumping Ethereum. Vitalik sold his Maker DAO position in response to that. Or I don't know if it's in response to that, or maybe they need to use the funds for something else. But the idea is for these projects to have their own app chain and not rely on Ethereum.
So I guess you just don't double cross Vitalik. That's what you don't do.
Yeah.
He's gonna drop the hammer on you. He's a vindictive little bastard. Sounds like. So VJ, what do you think though overall? Like with this whole MasterCard Solana or Visa Solana deal does? Is it a significant development? As far as crypto payments are concerned?
I don't think so. I don't think it's like significant development. The one that the article that you put had a very clickbaity title, and I don't think it's a significant development. All the Solana bulls are like, hey, no, this is gonna get Solana to the moon. In my opinion, it's not a very significant development.
Well, FBF is trying to pump his bags because he's got a lot of lawyers to pay for. Right. So, maybe he's behind this grand scheme. Okay. So we'll move on from this. And, the next article that we want to discuss is the race for spot Ether ETF begins with a bid from not one, but two entities. So Kathy Wood's ARK, which I know, Mariano, you're a big fan of Miss Kathy Wood. Maybe you want to touch on this, in 21 shares. So the new proposal comes as the SEC is already considering spot Bitcoin ETFs and Ether futures funds. So the SEC considers swap of Bitcoin ETFs. So ARK Invest, 21 shares, introducing their own spot Ether offering to the market. So I think this is interesting that this is occurring now, and with all of the groundswell that's been going on in the article, the recent articles on just Bitcoin. So now it's kind of like, okay, well, hey, everybody and their dog has now filed for a spot Bitcoin ETF. We might as well start filing for a spot Ether ETF because it's probably not far behind once that Bitcoin one gets approved. So what do you guys think about all this?
So, I mean, I think it's a good point what you just mentioned, Dominic, over, hey, everyone is doing it with Bitcoin, might as well we do it with Ethereum, right? What I'm not sure, and I would like to hear your opinions, is, so I don't think this is happening, that they're filing the Ethereum one because they fear that Bitcoin is not going to get approved. So they might as well, like they do Bitcoin, they do Ethereum. But I do think that there is also an institutional need for Ethereum to be traded as an ETF. And it is in a way like positioning Bitcoin and Ethereum definitely as the two most important assets in whole crypto world that people want to get their hands on.
I'll let you.
Wall Street is driven by narratives. In the previous kind of bull run for Bitcoin, the narrative was store of value. We have an unprecedented amount of new money that is being printed, and we want to be able to protect our assets against all the money that is being printed. And that was the Bitcoin narrative. And the Bitcoin ETF that launched was based on the futures market, Bitto and others that launched. So the next narrative, we are just looking for what the next narrative is. We have a few ideas of what it could be. But from Wall Street's perspective, Ethereum is a much more familiar asset. It follows the evaluation model that investor like Warren Buffett would use to be able to analyze it. Ethereum is a productive asset, meaning that it can produce results, right? You can stake your Ethereum, you're adding security to the network, and the network pays you some rewards back. So you can earn staking income. So it's a productive asset. That is an area that a lot of Wall Street people understand it. And productive asset as a whole category, it's about $150 trillion compared to store of value like gold, which is about $12 trillion, right? So it's almost like 10, 12 times bigger than productive asset is 10, 12 times bigger than the store of value asset market cap. So Ethereum is going to have a lot of interest. And it is just like dominoes, the first ETF that gets approved, which is, in my mind, it's inevitable. We are definitely 100% going to have a Bitcoin ETF. We are 100% going to have a Bitcoin spot ETF, Ethereum spot ETF. And, it's crazy to say this, we are also going to have a meme coin ETF. Like, crazy as it might sound, I do think it's going to happen. I don't know what the timeline is, but it is going to happen eventually. Even though I personally, don't support meme coins, that's what the market wants, and that's Wall Street is going to provide what the market wants. And the discount to NAV, that's because of the way that the Grayscale trust is structured. Once it becomes more of a spot ETF, we're going to have an increased liquidity, and the price would track very, very close to actual spot price of Ethereum. And we are not going to see this huge deviation from the NAV of the underlying asset.
We're actually going to get into that here in just a sec. But Vijay, I want to actually follow up on that with you real quick because, okay, so I tend to agree with you. I think that the Bitcoin ETF is inevitable. And there's also such a groundswell now that I feel like the pressure is on the SEC to approve. And we already talked about BlackRock's, batting, 999%, in their ETF submissions. So the likelihood of it, I think, is very much a foregone conclusion. But let's just devil's advocate for a second, if I may. What could, other than the SEC, right? Other than what the SEC has been doing and Gensler's been doing, what could hold that up? What could make that not inevitable? The fact that a Bitcoin ETF gets approved. I think you're muted.
Biden accidentally confusing and saying that he hates Bitcoin.
Thanks, Mariano. Appreciate the humor. SEC can continue to decline it, and every time they decline it, they have to give a reason, right? So what happens is they give like 3 reasons, and now those reasons are publicly available for everyone to see, and people go fix those 3 reasons and come back to the SEC, right? And the SEC gives 3 more reasons, and then they go fix and come back. There is enough money in the space that the former enforcer of SEC is actually now working at BlackRock, right? So you have the people who are actually declining or approving these transactions. There is enough money in it that the industry is going to start recruiting people out of the government, and vice versa, right? You're going to have people who are working at BlackRock go and join the SEC. So it is just a matter of time before all the cross-contamination, cross-collaboration happens. The end of the day, we want to be able to have a government that provides freedom to its citizens to be able to do what they want, to be able to have the right protection to its citizens so that they don't go and do something that harms themselves or others. And that is the role of the government. If it doesn't happen in the US, what's going to end up happening is the innovation is going to go somewhere else, right? We already saw the launch of spot ETFs in other countries. I think Japan has launched one. And the movement is just going to go to the other countries. So it's more of a competition among the various regulatory environments who could be the most friendly to provide the structure for innovation to grow.
Well, I got to say, you heard it here, folks. Your grandpa will now be able to buy SHIB token via an ETF. So, I know we're all waiting for it. Here we go. So next topic, everyone, Vitalik, our vengeful dude that we just talked about, just dropping Maker like it's hot, pushes for privacy pools to balance anonymity with regulatory compliance. So a research paper co-authored by Vitalik recently explores the privacy-preserving blockchain protocol that complies with global regulations. So looks like he co-authored this paper, along with the early Tornado Cash contributor Amin Soleimani, Jacob Ilham from the blockchain security firm Chainalysis, which is a pretty significant research firm, and 2 researchers from the University of Basel, delves into the subject of establishing a neutral infrastructure to incorporate privacy into blockchain transactions. Obviously, this is probably a response to the fiasco that was the whole Tornado Cash thing about a year ago, I want to say. Mariano, you probably have a better timeline on that. It builds upon the concept privacy pools protocol introduced by Soleimani in March 2023. This protocol, a fork of Tornado Cash, aims to improve its model to include regulatory compliance. And then finally, privacy pool operates similarly to Tornado Cash by mixing multiple user transactions to obscure their true origins. However, when users choose to withdraw funds, they have the option to generate a zero knowledge proof. Wow, this is a pretty big deal. So Mariano, I'm just going to kick it right over to you. What do you say about this development?
So we need to take a step back and agree that in a way this is just a theory, right? It's just a paper. There is no ulterior motivation at the moment. I know Vitalik and me and a lot of people that are huge fans of Tornado Cash due to its use on CK Snark's technology that made it basically impossible to find two connecting transactions in a way. And we know that it was almost impossible, for not saying impossible, because it got banned for that reason. It got banned by the United States. I don't remember exactly what's the governmental agency that is in charge of these things, but it was the first time that the United States recognized a DAO and a smart contract as something that they could ban United States citizens to trade with, to engage in trade. So that was a huge deal. There were a lot of consequences, but I think it planted the seed of the idea that Ethereum could be more private than what it is now. So there are, as we know, there are many privacy coins out there that they are more or less popular, but we often think that there's like 2 options, right? Either you go for something more useful with more dApps such as Ethereum or other coins, or you go for these specific privacy coins. I think that what Vitalik in a way is telling us is that, hey, there might not need to be you to choose like one of these 2 things. Ethereum can be private. It can leverage it more private transactions between users. And I think this is one of the ways that he wants to do it.
Yeah, so my understanding is that it like leverages ZK Snarks to like hide your transactions. So not only does it like hide your transactions just like Tornado Cash, but it allows you to share the fact that you don't have any laundered money without you having to share the rest of your wallet, is my understanding. So that's pretty cool. So that means if like the government bans this one, it's sort of like they're full of shit. They, you know what I mean? Like they completely don't respect like the citizens. They're not actually trying to fight.
They were never
citizens.
doing it for money laundering reasons. They were just doing it because they couldn't collect tax on it.
Yeah. So this will prove it. This is a way to sort of see them with their pants down.
Yeah, there are 2 aspects, right? On one hand, you have financial privacy. We want our financial information to be private and want to be able to support that. And a lot of the privacy-focused coins, they support that aspect. Financial privacy. Privacy is something that people are looking for and need. And at the same time, on the other hand, you also need to be regulatory compliant. Tornado Cash was not designed from the ground up to be regulatory compliant. It was designed more for financial privacy, right? So the paper is essentially a way to imagine how can we build something that can do both, that can have financial privacy and have the right regulations and compliance, and for both of them to exist at the same time. And the current view is that, hey, for us to have this regulatory compliance, things needs to be completely transparent. That's not the case, right? So this, the privacy pools, it's a protocol that outlines how users can demonstrate that they did not receive funds from a specific group of addresses without having to reveal their source of funding. So that's what they talk about in the privacy pool. And yes, it does leverage zero knowledge proof to be able to allow one party to prove that they have certain information without having to reveal all the underlying information. So it's you could consider it as like a spiritual successor to Tornado Cash for having both privacy and compliance being able to exist at the same time.
Awesome. How do we feel about that? Are we good on this topic? Because we got one final topic before we let everybody go for the weekend. So want to touch this, and I know VJ, you actually did touch on it before with Grayscale, right? Mm-hmm. So the Grayscale's Ethereum Trust discount drops to the lowest in a year amid their spot Ether ETF push. So the fund's discount to NAV had ballooned to nearly 60% late in 2022. Now I believe it's, discount has declined to 27% for the first time since last September. So can you unpack that a little bit? I know you touched on it a little bit earlier, but the discount to NAV or net asset value, why is it so wide now, and where do we see that going as time goes on, and maybe perhaps we get an ETF approved?
Yeah. So the reason why the discount exists is because of the legal structure of how the particular ETF is structured. So what happens is the Grayscale is set up as a trust, and the trust holds a certain number of Ethereum assets, and people get a fractional ownership of the trust in order to be able to get the underlying asset. But the underlying asset people can never get a hold of, because it's all held in the trust. Whenever there is a discount to, whenever there is a price difference between two different markets, the market is smart enough to be able to arbitrage. So we don't have to do anything. If we let the market mechanism turn out, then the market will take care of arbitraging the various price differences. However, in this case, it's not happening. Why? Because if someone owns the Grayscale ETF, they are owning fractional ownership of all the assets under the all the assets that the trust holds, but they don't have direct access to the Ethereum. When you turn it into an ETF, what will happen is when someone is owning a share of an ETF, it's both way, meaning you can either give the share in and be able to get the Ethereum, or you can be able to deposit the Ethereum in and get some shares back in return, which is different from what it is right now, which is a one-way deal, meaning that you can buy the shares of the Grayscale ETF, but there is nothing else you can do other than sell the share of the ETF, right? You cannot get the underlying asset that is held under the trust. Once you make it a two-way street, then the discount will disappear, and this discount is essentially the market inefficiencies because of the legal structure.
Will that inefficiency, will that discount disappear once there's a spot Bitcoin or a spot ETF approved? Will that eradicate that and close that gap?
So if Grayscale switches to become more of a spot ETF, then that discount will evaporate, because it's a two-way street, right? In a two-way street, you will be able to adjust the price really quickly, whereas a one-way street, it's very difficult to adjust the price. Then the entire market has to agree. Even if one or two arbitrage players agrees, the entire market has to agree in the current legal structure.
Wow. I hear that is just the Grayscale is just a money printer for Barry Silver. Like essentially like very low overhead, but his fees are like what, 2% fee on like what, like a $20 or $2 billion or however much it is. Just so it's a good thing that he's standing in front of the line of the ETF application, because I think he was one of the first ones to apply for it. So it makes sense. But we will see how that unfolds. So with that, everybody, any final comments? Any closing comments for episode number 10? Everybody,
episode 10. We made it this far.
We made it this far. That's what's up.
To 100 more. Let's go, guys.
You're so enthusiastic, Michael. I could just hear it brimming from your voice.
To infinity and beyond.
By the time we get to 100, everything will be mooning.
Oh, hey. So what episode number will correspond to when the Bitcoin ETF application gets approved?
Ooh.
We should get $100 each.
I mean, VJ, you said, hey, I'm going to give this like 6 to 12 months, and in the next 12 months, there will be a Bitcoin ETF approved. So
there is a likelihood of it getting more likelihood of it getting denied than approved. But in the next 5 years, I do think that it will get approved. So somewhere between, say, we are at 10. So say like next year is episode 60. So I would say somewhere between episode 60 to 110.
69.
I'm going to say 27.
You're going to say which one, Mariano?
27.
27. I'm going to go
okay.
I'm going to go 35.
35. Okay.
Yeah.
For those of you who are watching, go ahead and type it in the comments. How many weeks from now do you think that the Bitcoin ETF is going to get approved?
No, on what episode? On what episode?
On what episode?
What episode?
Yeah, what episode? Yes, what episode is it going to get
also,
approved?
we're not letting people go for the weekend. This gets posted on Monday.
Totally. Yeah, this is true. Good call, Michael. So hey, so I'm going to revise mine since this is 10. Number 10, I'm going to go 35 weeks from now. So 45. I'm going to go with week number 45. So yes, awesome. Well, comment down below. Give us a like. Give us a subscribe. Everybody have a great week, and we'll see you on the next one.